Good morning. Welcome to the 11th Annual Gabelli Waste Services and Sustainability Symposium. This is our 11th year, and we're pleased to have a great group of companies. My name is Tony Bancroft. I'm with, this morning, Hannah Howard, Michael Bergio, and I will be moderating throughout the morning. I have been at Gabelli for 16 years and cover the waste and environmental services industry. I also follow the aerospace and defense industry. Hannah has been with us for 7 years and covers the packaging industry as well as broadcast and media. And Michael joined us 3 years ago and works with me in our industries. Before we get started, I'd like to go over our agenda and then briefly review the environmental services industry, focusing on waste services specifically. Okay, this morning we've got a great lineup of companies focusing on waste management, recycling, and sustainability, as well as renewable energy. We'll start off this morning at 8 o'clock with Top Point, and then go to Republic Services, and then Ranpak at 9, followed by Waste Connections, Secure, and Casella Waste. And then at 11 o'clock, we'll go to Seco Environmental, Greif, and we'll go for a 15-minute lunch break at 12 o'clock. Following that, we'll kick off again at 12:15 with Waste Management virtually, Aduro Clean Tech, Permafix, and Dots Nano at 1:45, and they'll be virtual as well. 2:15, we'll start with Loop Industries, and then 374 Water, BioLargo, and then to finish it off, AE Carbon Capital, which is a private company. Okay, let's briefly go over the U.S. waste industry. On a revenue basis, it's about a $100 billion addressable market, with half of it in public companies, 20% in privates and third parties, and 15% in municipalities. The rest is special waste like medical and hazardous. On a tonnage basis, municipal solid waste is almost 300 million tons a year. Construction and demolition is about 600 million tons, but a high percentage of that is road waste aggregate, and only about 100 million is in construction and demolition that goes back to the waste, goes through the waste industry. E&P waste is about halved since the peak in 2013-14 with fracking. This tonnage is mostly from solid drill cuttings that are put in landfills or treated in disposal facilities. Recycling remains around 30% of waste generated. Okay, why we like waste? I'd categorize it into 4 main areas. First, it acts as an unregulated utility in a private market. Most of the cash flows are stable and largely recurring, with almost half of the revenue tied to an inflation-type index. On the disposal side of the business, the industry has strong pricing power. There are limited economic alternatives, and although the industry went through a large roll-up period, it's still widely fragmented, and consolidation potential remains. And I'd throw in, after last night, one more tariff resiliency, where obviously most of the waste industry is local, domestic, and limited need for global trade. Okay, but the main reason we like it is the barriers to entry in the industry, and number 1 is landfill. There are less than 2,000 landfills in the United States, over 20,000 previously before the Clean Water Acts and CERCLA, making it virtually impossible to permit a new landfill in a populated area due to regulation and NIMBY. Transportation costs becomes the next best alternative decision, increasing costs for third parties. And then transfer stations and waste and energy facilities, they act similar, have similar dynamics. The second most important key in the industry is a franchise model. Some markets, particularly on the West Coast, have exclusive franchise agreements, granting the operators essential perpetuity all the waste services in that region. And then thirdly, the scale advantages. for collection operations. There's typically 2 to 3 operators that dominate a local market. This makes it easier to grow in already established markets with infrastructure and the ability to spread costs. Also, recycling is a large capital investment, making it difficult for third parties to operate and compete, as they need to upfront a lot of capital, and some of these investments are mandatory to compete in certain municipalities. So where are we going? Market drivers, obviously, by far the largest is U.S. GDP. Historically, solid waste volume growth is largely driven by what the U.S. consumer buys and then essentially puts out, right? If you buy a new house, you buy a new couch, and you throw out an old couch. Second is housing. Single-family starts are a strong indicator of highly correlated MSW growth. This, in turn, drives more commercial volume, as well as C&D, where businesses start around new communities, building new Starbucks and new restaurants. On a 1-year lag basis, if you were to essentially lag volume starts by a year, you see that MSW closely tracks housing starts. On the pricing side, CPI, of course, drives a lot of pricing. As I said, generally 50% of collection contracts are based on some type of inflation index with a cost-plus measure, with about a 6 to 12-month lag. And then on the recycling side, the recycling industry has recently gone through a large paradigm shift, with China shutting down recycling commodity imports. The industry has fortunately been able to shift commodity price exposure back to the customer using processing fees, mostly a processing fee cost now. So in summary, of today's presenters, we continue to like the waste industry due to its virtues and of an essential service and true pricing power. We see continued strong pricing environment along with margin expansion as the industry has learned to operate more efficiently. The industry's pricing mechanisms allow for it to drive increases which offset inflation in operating costs and fuel, as well as de-risking itself from commodity price exposure swings using processing fees. We see the continuation of M&A as beneficial to margin expansion through real hard synergies like route density and asset and overhead consolidation. And then opportunities to reduce costs, improve efficiencies, which I'll likely hear about today with EV trucks, automation, as well as renewable natural gas and PFAS. And then I'd say throw in lastly, again after last night, relatively limited exposure to tariff impacts.